So picture this. You've got 1.4 crore rupees just sitting in your NRO account. A UK bank is waiting for it, but your transfer gets completely rejected. Let's dive right into this explainer and figure out exactly what went wrong and how you can fix it in 8 simple steps.
Man, it is an incredibly frustrating scenario, isn't it? It's a massive pain point for so many non-resident Indians. You know, you've sold a property, you've collected rent, or maybe liquidated some investments. This is your legal, hard-earned money. You've followed all the rules, the funds are sitting right there in your Indian bank account. But the second you try to wire it overseas to where you live now, boom, the system just throws up a massive brick wall. So why exactly does the system block your money from leaving India? Well, to figure out how to fix it, we really need to understand what's happening behind the scenes.
Okay, to understand the rejection, we've got to look at how FEMA, that's the Foreign Exchange Management Act, actually views your money. When you hold cash in a non-resident ordinary or NRO account, that money was generated domestically, right within India. We're talking local property sales, local rent, dividends. When you try converting this domestic rupee income into foreign exchange, like US dollars or British pounds, it directly draws down India's sovereign foreign exchange reserves. And because of that, the Reserve Bank of India doesn't treat it the same way as foreign money you just happen to park in India. They manage this outflow very, very carefully.
So the crucial point you absolutely need to remember is that FEMA strictly limits NRO account repatriation to $1 million per financial year to manage those capital outflows.
And here's the kicker. This $1 million limit resets every single year on April 1st, creating a very strict timeline for your capital remittances. Literally, if you don't use your $1 million allocation by March 31st, it's gone. You lose it. It doesn't roll over to the next year. Now, while this cap covers the principal amount of your assets, like the bulk proceeds of that property sale we talked about, it's worth noting that current income, like interest or rent, can generally be repatriated above this limit once your taxes are cleared. But getting that tax clearance? Yeah, that's exactly where most transfers hit a total brick wall.
Which brings us to the ultimate, most hair-pulling bureaucratic mistake that triggers immediate system rejections. You can have your funds perfectly lined up, well under that $1 million limit, but if you mishandle the required compliance documentation, the bank's compliance filters will automatically freeze the transaction. No questions asked.
The key here is the exact sequence. Listen closely. You absolutely must secure Form 15CB from your CA before filing Form 15CA online. Form 15CB gives you a unique acknowledgment number, and you literally cannot file 15CA without it. Getting this backward instantly triggers a rejection.
Okay, enough of the rejections. Let's get this sorted. Here is the rapid-fire 8-step process to fix your blocked transfer, satisfy all those FEMA and income tax regulations, and finally get your money out of India and into your overseas account.
Follow this exactly. Step 1, deposit all sale proceeds straight into your NRO account. Step 2, verify your TDS is deducted. Step 3, engage a CA for tax clearance. Step 4, obtain Form 15CB with a UDIN. Step 5, file Form 15CA online. Step 6, submit these forms plus an A2 declaration to your bank. Step 7, pass the bank's $1 million limit check. And Step 8, execute the SWIFT wire. Boom, that's your blueprint.
Now, I want to share a massive pro move with you. Once your taxes are cleared, transfer your funds from your limited NRO account directly over to your NRE account to unlock literally limitless repatriation. It's like finding a secret door. You see, an NRO account locks you into that $1 million yearly ceiling, but an NRE account, the non-resident external account, has zero repatriation limits. None. Zero. By filing your 15CA and 15CB for a domestic transfer between your own accounts, you shift the money into the NRE environment. From there, you can wire it to the UK, the US, wherever you want, completely at your own pace with absolutely no further documentation required. It is a total game changer.
But remember, the devil is always in the details. You have to be incredibly careful that the exact net proceeds match your bank records, and that your TDS perfectly reflects in Form 26AS. When you sell a property, the buyer deducts tax at the source. That's your TDS. If that buyer delays depositing that tax with the government, or maybe they just input your PAN number slightly incorrectly, it won't show up on your Form 26AS. And your CA cannot issue the 15CB without that proof, meaning the bank will halt your transaction immediately. Seriously, even a minor spelling variation between your forms and your bank account can trigger an automated rejection. You gotta be precise.
Now, I do have some genuinely good news for you, and this often gets really confused in the media.
Unlike resident Indians dealing with the Liberalized Remittance Scheme, or LRS, you can rest easy knowing that NRIs remitting from NRO accounts do not pay tax collected at source, or TCS, on these transfers. Residents sending money abroad get hit with TCS of up to 20% on certain amounts. But as an NRI operating under the $1 million framework, you only deal with withholding tax, or TDS, on the actual income earned. Once your TDS is settled, there is absolutely no extra TCS penalty for simply moving your own capital across borders. So that's a huge relief.
And looking just ahead, the 2026 FEMA liberalization mandates real-time digital reporting, meaning the system is getting far stricter on tracking, but much faster for those who strictly follow the rules.
Moving your wealth across borders doesn't have to end in a frustrating bank rejection, as long as you follow the exact sequence of compliance. Are you ready to ensure your next major transfer clears the system flawlessly? Don't get stuck again. DM me 15CA for your free repatriation checklist and take back control of your cross-border wealth today. Because as global banking becomes completely digitized, the days of finding loopholes are totally over. So the real question is, will your wealth management strategy adapt, or will your capital get permanently trapped behind a digital wall?